Well, hi everyone. Welcome to the Buffett and Beyond Research Stock of the Week, and we're going over advanced micro devices, and this is June 14th, 2025, right about in the middle of the year. Advanced micro, boy, it's a hot stock, but folks, is it time to buy? It's had a big decline, so let's look at some numbers and let's look at some charts. And for those of you who want to get more of these sent directly to your email box, and I'm talking about these analysis and the ETF letter, just full month free subscription, just go to buffettandbeyond.com right down here, buffettandbeyond.com. All we need is your name and your email. Actually, we just need your email. So just do that. You'll get a full month free subscription, and you'll see exactly what we do with other stocks out there and how we analyze them. And remember, folks, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's look at advanced micro devices. Well, we know it's a leading maker of integrated circuits, and it produces microprocessors for desktop PCs, portable computers, and servers, and under Athlon, Turion, and Opteron designs compatible with Windows apps. And it also manufactures graphics processors through ATI acquisition. Yeah, that was a good acquisition back in 06. And circuits for communications. Revenue expected to be up again for 2026. And it has 28,000 employees, which is 2,000 more than it did 6 months ago. Now we're going to look at two charts here, this one and the next one, and I'll go back and forth. But right now we are looking at the blue, which is the average stock, and we're looking at the green, which is AMD. So we're looking at the clean surplus return on equity. Yeah, AMD is much better than the average stock, more than twice as much actually. And net income growing at 20.8%, where the average stock is growing at 13%. Revenue almost twice as much than the average stock. But look at what we had 6 months ago. Yeah, and I'm going to go back and forth. So this is 6 months ago. We had a 33% average ROE. Now we have a 28%. Let's go for 6 months ago. Net income growth was 39%. Now it's 20.8%. And the revenue 6 months ago was projected to be 22.4% for this year and the previous 4 years. So we're looking at 5-year average, and now it's 12.2%. So what we're looking at is that it is still a better than average stock, no doubt about it, but not as good as it was just 6 months ago. Now, a lot of these numbers are projected numbers going into 2026. So these are projected. Let me go back again one more time. These are projected, but the stock is coming back. How do we know that? Well, let's go look. Okay, let's look at the net income down here, and you can see that in 2022, it was up to $3.50 per share, which gave us a 41.2% return on equity. Now remember, the average stock has what? 13.5% return on clean surplus return on equity. In 23, then we dropped down to $2.65. Now we're back almost up to the 22 number at $3.31 for 24. This year projected to be $4.65, and next year $6.40. So look at this clean surplus ROE. Now it's starting to rise again. So that's very, very good for a stock. But look back in here how it dropped almost in half because of the 2023 number. Let's look over here to net income growth, and we can see that in 2023 how it dropped down, and then it went back up strong, and still projected to be 37%. Averaging 20.8%, where the average stock is what? About 13%. Revenue growth average almost twice that of the average stock. The average stock is what? 7.1%? Yeah. But look at these for this year, projected for the end of this year and for next year. So that's pretty high right in here, folks. And of course, it has almost no debt. It's paying no dividend. So it's putting all the money back into itself over here to retention rate. Takes all the money it's making, put it back into itself in order to grow, and it looks like it's growing nicely as long as these numbers come through. So let's look at some charts of the price action. And the last 12 months, yeah, you can see how it has been hurt because that ROE started coming down, and you're going to see this a lot better in the next chart. So you can see how it's dropping, but look what it's doing in here. Look like a double bottom here, and it's starting to rise again. That's why some people are hot on AMD, Advanced Micro Devices. Let's look at the last 5 years, and we can see it's been up, then it came all the way down, and that was when it had the clean surplus ROE cut in half almost. It came down to the market averages, shot way up again, and came down to the market averages, and now it's starting to move up again because just last week they're talking about the semis and the tech stocks starting to lead the market once again. So maybe this is a buying opportunity in here. But let's look a little closer for those of you who do a little bit of trading. So right now we're looking at a rising ROE from previous charts, and we're looking at a bounce up off of the S&P 500, which is this black line. And with tech and semiconductors starting to lead the market, maybe there's something here. Let us look at a candlestick chart, and we can see this rise coming off that bottom, off of the line that made up the S&P 500. So we're right in here, and we can see it coming off that double bottom in here, going up, coming down. Now this green line is a 20-day moving average, so that has turned up, doing very, very nice. You can see it went down to test it, went up, went down to test it, going up. This red line, 200-day moving average. So we're looking at it bounced off this 200-day moving average to the downside. In other words, it failed to get through it, and now it's trying to regain itself and trying to push through that 200-day moving average right now. And we're in a very choppy market, so we're just not sure. Look at this volume down here. The green line are the close. Now we're looking very short term here. We're looking at just a couple of days earlier in this week. We can see the green lines, which represent the volume on the days that the market closes up, and then we see this fall off on Wednesday, fall off of the market, or this is Tuesday actually, had a nice rally, and then it still went up, but it went up on lighter volume. And as it approached that 200-day moving average, some of the traders began to sell, and then you can see right here on Thursday it failed, and now it's trying to regain itself. So a trader would stop and look at this and say, let us get through the 200-day moving average and go up above it and then come back down to test it again. And if that test is good, then you would buy it. So that's for the traders. Back to this chart, we're looking at the long-term holders. Would this be a time to get in no matter what and just hold on for the long term to see if it's going up, because the clean surplus return on equity is twice as high as the average stock. So it should be better than the average stock. But you got to admit that there's other companies, and with the name like NVIDIA, who AMD is in a little competition with in some areas. So you got to say, hey, it's playing second fiddle to a stock like NVIDIA. And that's why we got out of AMD somewhere back in here, and probably right in here it was, because we had projections for 2022, which is this year, right in here. So it went down. AMD went down with the rest of the market. The S&P lost 19.6% or so. The NASDAQ lost 34%. So yeah, so that's what we're looking at in here. So we came back with a nice rally, and then all of a sudden we're falling all the way back down again, as last year was a tough year for AMD, and now it's starting to regain. And if the projections for next year hold true, it's hard not to buy this stock in here. But when we look at short term again, we've got to get past and hold on to this 200-day moving average, go above it, come back to test it, and then stay above it. Right now, we're getting a little short-term action, negative action, but that's what the market is doing right now overall. It's being very, very choppy. So we do not have AMD in our portfolio any longer. We do have NVIDIA. So we're looking at this and we're looking at it close and we're saying, okay, we might get into it if it can hold above this 200-day moving average. Again, green line is the 20-day moving average. This blue line down here, 50-day moving average. But you can see that we're overbought in here, and sooner or later there'll be a move down. So maybe patience is the way to get into this stock. And I hate to say it, but maybe a little at a time for those of you who want to get into a lot of shares of this company. So yeah, a little bit at a time, because if it bounces off this to the downside, it's got to hold at this 20-day moving average in here. And you can see that 20-day moving average has been support lately, and it's got to be support again. So it's playing around between this, in this area here, and we want a clear signal before we do anything. So folks, we had a choppy week this past week, but it's still, the market is just trying to regain its previous highs, and it's doing it slowly, but the market looks fairly, it's choppy, but it looks fairly strong because it doesn't give way to the downside for very long, like a couple of hours a day, and then it comes back again. Today, the market started down, and right now it's about even as I'm recording this on Thursday afternoon. So we call that a choppy market. We have to see where it's going to take a stand and find support and then continue to move up. So we're being patient here, folks. But we had a good week. We had a good month. We have a nice rally in the market. Our portfolios are doing swell. And for those of you who are following our shorter term covered option writing and spread positioning in some of the stocks, we've done well in that. So you go out, you take your mind off the market, be with your family, be with your loved ones, just go to the beach or go to the golf course or sit home and watch TV. It doesn't matter. Take your mind off the market. You, most of all, stay safe. And folks, we'll see you back here in a couple of days.